It's all over social media. Taylor Swift and Travis Kelce are thinking about buying a house together. Why this is a big deal, I don't know. But anyway, there are some things to learn here. Now, in their situation, this is going to be a completely different conversation. Let's just be honest. But the question is, if you're in a situation where you're going to purchase real estate, residential real estate, with a non-spouse, so you're not legally married, there are some things to know. First of all, let's just kind of back up. Whenever you go on a home loan, a mortgage, it's important to know that you're on that mortgage until either that mortgage is refinanced or the house is sold. And this is really important because if you were purchasing the house with a future mate, a boyfriend, a girlfriend, a parent, you have a co-signer, anybody that's not technically a spouse, there are going to be future situations that come up potentially. And we see it all the time. So for example, let's say we have two friends and they are leveraging their income and their assets to be able to purchase a house. They do that. They have ownership for 3 to 4 years, and then one of the friends meets somebody and decides that he wants to move forward, get married, and buy another house. We have to deal with the house, right? The house that he purchased with his other friend. In that scenario, they're both on the mortgage and they're both on the deed of trust. Many people think that just by disclaiming their interest in the property, that they are now off the hook from the mortgage, and that is not the case. And in fact, that is probably the biggest myth out there that we see all the time. This is important because not all relationships end on good terms. So we have in fact seen where people have disclaimed their interest in the property, they're still legally liable on the mortgage, and then the person that's retaining the home or living in the home defaults on the mortgage. It does impact that other person's credit profile because they're still legally responsible. And because they're not married, there's no divorce decree, there's no legal entity kind of talking about the resolution, who retains the house, etc. So it's very difficult to maneuver those situations. So my best advice is if you are going to purchase real estate with a non-spouse, get an agreement, see a real estate attorney, walk through what's going to happen if at the point you all decide to go your different ways, or maybe we're in a situation where the person that wants to retain the house can't refinance, can't get this other person off of the mortgage. Then what? So again, lots of different nuances here that take place when we have two people that are purchasing a home, residential real estate that is, that are not legally married. Be sure to consult an experienced strategic mortgage advisor that can kind of help you walk through it. And oh, by the way, depending on the state that you're going to purchase the residential real estate in, there are some states that are community property states. So even if you are married, what does that look like? If you're purchasing in a state that is not a community property state, even if you are married, what does that look like? What are your rights? There is just so many different angles to this story. But I wish Travis and Taylor all the best. But if you are in a situation where you're considering co-signing and or purchasing a home with a friend, a future partner, etc., or a partner, maybe you're not ever going to get married, whatever that scenario is, just get some consultation from an experienced mortgage advisor. Now, maybe you're already in that scenario. Okay, it's okay. Like, deep breath. There are solutions. One of the solutions would be either one, refinancing, having the person that's going to retain the home refinance out of that mortgage. Now, if they're a really low interest rate mortgage, they may not want to do that. Maybe they can't afford it, or maybe they just psychologically can't get through it because interest rates are higher today than when potentially you purchased the home, let's say 4 years ago. So in that scenario, there is a program out there where you could potentially have the person that's going to retain the property take out a home equity loan. That could be a home equity line of credit. That potentially could be a home equity loan that's not a revolving line of credit, that has a fixed payment, fixed interest rate, and a fixed term. But there are solutions out there where you can leverage, both of these are second mortgages, that they could leverage the equity in the home and give you your portion of the equity so you can move on and go buy another home or whatever it is that you want to do with that equity. So lots and lots and lots of different scenarios out there. And again, if you have questions, whether you're thinking about buying a house with somebody or you have purchased a house with a non-spouse and you just need to kind of dive into what the solutions are, feel free to reach out, call or text 480-725-0150.